Welcome all to the node. I am Mike, aka Veteran Crypto, and joining me shortly will be David. But got some good news that's coming across the wire today, and looks like some good things are happening in crypto. Let's take a look. But if you want to join the conversation and join the chat, and ask questions, tell us we're full of shit, whatever it is you want to do, go ahead and jump on over to YouTube, and you can find us at the Node Network, all one word. And we'd love to see you in the chat. We welcome all points of view. If you again, you're bullish on a project, you're bearish on a project. If during one of our deep dives, you're an investor in one of the projects that we cover, and you feel like we got something wrong, we welcome it. We genuinely do. We just want to put good information out here. So if you want to jump in our chat and you want to, set us straight, let us know what it is that we got wrong. And if you could do us the service of citing your source, let us know where to find the information that backs up your claim. And we're more than happy to make adjustments to any information that we put out, as long as you cite your source and it's a credible source. We're not here to FUD any projects. We're not here to hype any projects. We are here to paint an accurate picture of these assets as they currently sit. We are not going to speculate on what potentially might happen when it comes to tokenomics, when it comes to adoption, anything like that. We just report the news. So let me add David in here, and we'll pop over here. Now David over here. What's up, brother?
Oh man, so this morning, Mike, I was able to bust out 14 muscle ups, 14 pull ups, and then this handle too.
Oh, dude. You did some chin ups, some pull ups, and some muscle ups.
Yeah, dude. Yeah.
Nice.
So got up to 14. I used to be able to bust out like 25, 22, 23. I don't think I quite got to 25, but 22, 23-ish, that was my max.
Still awesome. That's maxing out a Marine Corps PT test. You only need 20 to max out a PT test.
Yeah, man, that was back in 2020 during the pandemic. So, yeah, dude, getting close, getting back up there, and got my weight down to 213 this morning. I was 211 over the weekend, man. It feels so good, dude. It feels so good.
Yeah, I bet. All right. Well, if you could, if you're in the chat, if you're watching on X or another platform, if you could, like, share, subscribe if you find the content here valuable. But let's go ahead and jump on into it. So I'm not going to lie, David. I went in a good evening crypto this morning. They're live right now, but I popped in there
all right,
for about 10 minutes. And dude, they are definitely going to be, we talked last night, as me, you, and Jeff, and I think on Crypto and Chill on Tuesdays and Fridays, we're going to start doing deep dives on content creators. We're going to start, and we're going to point out the good and the bad, but we want to start bringing to light some of these content creators that are straight shilling projects. And then again, people that are out there, that are trying to grow channels that have integrity, that paint accurate pictures of what's going on with a token, what's going on with a project. Because we want to help people like that grow. We want to grow the crypto community to be one of integrity and one that is putting out content that is not going to lead to people being exit liquidity.
Yeah, you don't want to get wrecked based on, really, really bad information. And there's a lot of bad information out there, man.
Dude, I was in the chat, listening, and they were hyping up XRP and using this interview as a credible source. And the guy was talking about moving or XRP being a blockchain. And it's like, XRP is not a blockchain. It is a gas token. The XRPL is the ledger. And a bunch of people in the chat were going on and on about, all this bullish stuff for Ripple, and equating it to XRP. And so I was pointing out to him, like, listen, you're bullish on a gas token that has a $70 billion market cap. Based on what? And they're like, if you're not bullish on XRP with everything that Ripple's doing, I'm like, you're not understanding me. What connection does XRP have to the success of Ripple? What is the value capture of the token?
I'll tell you what it is, Mike. How many different ways can you say the word zero? Zero, nada, zilch. How many other ways can you say it, man? No connection at all. And I see what Crispy is saying in the chat. Careful. I don't know who Jake is, but Jake sued someone or something, because someone called him out by name. So here's what I have to say to that. Dude, these people who are pushing XRP and Cardano and Kita and, insert garbage token here, they don't want to go through discovery, man.
Anybody that is blindly shilling any token and with the information that they're putting out is inaccurate. Anybody that is saying XRP is going to $10,000 and saying it with some kind of certainty is ridiculous. It's at $1 right now and it has a $70 billion market cap. So if it's going to 10,000x based off what?
So ridiculous. And but I gotta say though, man, the thing for me with these guys is I firmly believe that they are getting paid. It's gotta be either. I don't see how it could just be views. There's got to be some other incentive mechanism. I'm not
willing to say that because I have no evidence to support it. It's I'm not going to say that anybody's paid. I want to make sure that we only say things that we can back up. But I will say that any channel that does nothing but talk about one project, and there's a lot of them out there that talk about XRP. It's because it gets hyped constantly and it gets eyeballs. People will tune in to anything that is bullish on XRP. We refuse to do it. I'm going to call it out for what it is. I was a huge XRP bull back before RLUSD, and the court case that they won where XRP isn't a security, and all of that the token never pumped. It ended up later on doing a speculative pump where I sold and made some money, but it's with the launch of RLUSD, the whole narrative for a high dollar XRP, and you can go back and watch Good Morning Crypto, Good Evening Crypto, whatever they call themselves now, and a bunch of their guests. The whole premise for it being a high value was that it was going to be used to move value. This is pre-RLUSD. So XRPL is the ledger. And they were saying that it needed to be a high dollar value because, back in the day, XRP and the XRPL was going to replace Swift. That was the whole narrative. And that hasn't happened, and it probably won't happen. But the premise was that XRP was the only thing that was on the XRPL. So if they were moving value, then XRP had to be, $100, $1,000, $10,000 to be able to move the trillions of dollars of cross-border payments every day. That
doesn't make any sense. That doesn't make any sense at all.
Well,
that makes no sense.
It made sense because if you're moving $1 trillion and there's only so many, XRP, then it had to be more expensive than it is now. But that being said, banks and institutions don't want to move value with a volatile asset because in the little bit of time that it takes for that transaction to go through, what they bought that XRP token for and what it ends up being worth on the other end, even a shift of 1%, when you're moving billions of dollars, you potentially are losing millions of dollars. You can't do business like that. That Ripple, talked to banks, and they understood that and listened, and that's why they launched RLUSD. So XRP, for the most part, there are exceptions, but for the most part, it is a gas token that costs 0.00001 XRP per transaction. I have challenged repeatedly, Abs and Johnny Crypto and, all the XRP maxis. I have challenged them repeatedly to come on the show. They even took a stab at us on their show.
Oh, it was great.
Yeah. But it's, I've told them, come on our show. I am more than happy to have a spirited but logical and respectful debate on the merits of XRP.
And so on the merits, I was thinking about this morning about how can we use the Intel library to, here's Exhibit A, here's Exhibit B, like here's some evidence. And I think the best way to use the Intel library to be able to do that is I'm going to build in our ability to add multiple sources to each piece, each Intel dossier. We're going to be able to add multiple sources to them, and they're going to be searchable. And so that way we'll be able to jump into a single Intel dossier and actually search through it. So when we're going through and, talking through these different content creators who shill these valueless projects and end up getting a lot of people wrecked, we'll be able to say, hey, you know what? This is the reason why what content creator insert name here. This is why what they're saying is factually incorrect because, evidence. And so we'll just be able to search through our own pieces of intel that way. I think that'll be really, really valuable.
Well, that's what I'm thinking about doing on Crypto and Chill with Jeff. Like we talked about is, we're going to play, their own words. We're going to play clips from these different channels and we're going to pause it, whenever they make statements and make claims. And then we're going to have cited sources. It's not going to be our opinion. We're going to have cited sources, from official documentation, from, news articles, whatever. And we're going to show where it's factually incorrect because it's obvious, just sitting in the chat for 10 minutes. I mean, I haven't been in there forever, but just sitting in the chat for 10 minutes, it is obvious how little their community knows about XRP. Because
now, just about XRP for a moment, Mike, can you share my screen? Can you bring my screen up? Because even though I believe that, XRP is a valueless piece of crap, even though I believe that.
You can,
right.
Absolutely.
Right.
You can make money on speculative pumps and shit. Absolutely.
So that's the whole point. Even though I think that XRP, maybe at some point throughout the end of this summer into the early fall, heads down to, 70 cents. Looks like there's support down there. For right now, if we're talking about the next couple of weeks in this month of July, this is the 200 period moving average on the 4 hour. And we've got a confluence here. So you've got down sloping resistance and you've got this 200 period moving average. Look at what XRP did. It broke out and it held support right here. And it looks like it's bouncing a little bit. That's bullish. So if we zoom in here.
For price. That's bullish for price.
Bullish for price. Right. So, I mean, if we take a look, this on the 4 hour, this is a bull hammer. And it looks like it's putting in some type of, triangle right here. This could break out a little bit higher, maybe with a target up at 118, $1.18. So, that could make sense. And also, today, Bitcoin was down, 3% in the morning session, earlier this morning, putting in a big bull hammer too. So BTC holding its 200 period on the 4 hour after the breakout, holding with a big bull hammer candle. If Bitcoin gets above 64K, I think it runs to 67K. And then if we take a look at MicroStrategy, MSTR, big bounce off of those lows, down here at 82 bucks. And this is a big bullish engulfing candle from yesterday's price action, the price action this is Friday's price action on Thursday, but it's sitting at a really important level of resistance. Now, if it breaks out, MSTR probably runs to the top of this channel where you've got that 200-day moving average. So if it breaks out above this level of horizontal resistance, it probably heads up to 140. Now, even if it heads up to 140, the problem here is that there's a Bitcoin prophecy. You call it the cycle, call it whatever you want to call it. It's a prophecy, I think. And the prophecy says that the bottom is not in. So yeah, we get a rally here up to 140 on MSTR. That probably equates to a rally on BTC up to like 67K. We get that rally, and that could be all she wrote for this summer. And then things reverse back to the downside. So I'm not convinced yet that the bear market is over. And I think that we've still got to wait until October to really start loading up bags. So, can you make money though? Speculating on a move upside? Of course you can. Of course you can. But I just want people to go in eyes open to these different projects when they start buying stuff like this. If you buy Bitcoin, you've got to know what it is. And if you're going to buy XRP, man, you got to go in eyes open. You got to understand what that thing actually is. So it really just comes down to evidence. You need as much information as you can possibly gather on these projects, coins, tokens, whatever you're investing in. Just go in and be well educated.
People need to understand, where we're coming from here. It's not, our intent is not to FUD these projects. Our intent is we are looking for long-term investments. We're me, myself, I'm not a trader. Trading, you can make money on anything as long as there's volume, as long as there's volatility. You can make money trading, meme coins, but long-term holding, I am focusing on, and David is, we've come up with, the trifecta where we focus on real value. We focus on looking at these crypto projects like you would a traditional company valuation. Because again, you start looking at these projects, we'll just go down the list here. You got BNB, it's almost an $80 billion valuation. The token itself doesn't have a ton to do with the platform. So
so BNB, Mike, BNB actually does
there's a lot going on with it, but is there $80 billion worth of going on?
Well, so I'll tell you what I know about BNB, and we haven't run deep dive research on BNB, the token yet, or the BNB chain. But I've run deep dive research on BNB in the past, and so I think what we're going to find is going to be pretty interesting. But the thing about BNB chain is that it's got a ton of active users, a lot. And that takes the adoption. That's a big positive for BNB right there. But also there is some type of a flywheel effect there. So I'm pretty sure that we're going to learn more about that during the deep dive research when we run that this week, maybe.
I'll hold on to making comments about BNB.
Yeah, so BNB might actually have something positive going for it.
Well, and I want to point out that the three things that we look at is we look at value capture. So basically where the token through some part of the mechanics or the tokenomics, you actually get a share of the fees or revenue generated. Good examples that we always use is Hype. Hype, as long as there's high volume, a lot of trading going on and it's generating a lot of fees, then there is an automatic buyback and burn of the token, which makes it deflationary, which so far has made token price go up in a big way. However, there are lots of tokens out there that no matter how much adoption happens, no matter how much fees and revenue that are generated by the project or the protocol, the token has no part of that, other than maybe being a gas token or a governance token or something like that. And there is a bit of value in those things, but not for a long-term investment. It's not going to move the token in any significant way in and of itself. Can there be speculative pumps? Absolutely. If there's like huge news or something like that, we see it all the time. People buy a lot of these tokens out of, and I'm going to say it, and I'm not calling anybody stupid, but they buy it out of ignorance of what the token is, what value it actually holds. And to understand the value it holds, you have to understand the relationship between the token and the project or protocol. And if it's just a gas token or just a governance token, you have to ask yourself, what would make the price go up other than speculative pumps.
Right.
And long term, that's what we are focused on here. So projects like Hype, projects potentially like Canton, because Canton does not have the adoption yet, the large scale adoption enough to flip it deflationary. It's still inflationary, as bullish as I am on it. We call it like we see it. It is still inflationary. And that's why I feel like we haven't seen the price take off yet. There's a bunch of adoption happening. And as that adoption, goes live on the network and it generates fees, those fees will get burned and will move closer to that equilibrium and it becoming deflationary. But that is speculative. We are still waiting for that to happen to see if, if it does, come to that. And we haven't seen that yet. So again, we do not FUD here and we do not hype here. We paint accurate pictures of the current state of these assets. So,
yeah. Now, if you take a look at CC, the token, the Canton token, it does right here anyway. It looks a little bit bearish to me. Getting rejected at that 200-day moving average, getting rejected below the 200-day moving average. So we got a big channel here for CC. And if we just zoom in here, you got this big channel. Here's the top of the channel. Here's the bottom of the channel. Here's that 200-day moving average. Now, this rally during the session today, this rally up towards the 200-day moving average, they got rejected below the 200-day moving average. That's bearish. And putting in this is, just a bearish hammer. This is a bearish hammer candle. So you might, if this closes down here, you might see Canton actually move down towards the bottom of the channel, which comes in at 13.5 cents. So as much as I like Canton, I call it how I see it. Same thing with XRP. As much as I dislike XRP, looks like, hey, if Bitcoin rallies a little bit further, XRP probably does too. So Canton's a little bit less positively correlated with the rest of the digital asset space. So, just something to be on the lookout for.
Well, I mean, if you look at it, the whole time it's been trending in this channel, sideways, the rest of the market has, lost a large amount of its market cap. So, Canton has held up. It's like, yes, it hasn't pumped, but it hasn't dumped. It's just been ranging between like 13 cents and like 16 cents or 17 cents. Basically, since the token launched, the token launched at one point, it dipped down to about 6 cents, recovered, and been ranging ever since. So it really does, and I think that really supports our thesis here that these projects with real adoption, because Canton is the chain that generates the most fees and revenue out of any crypto project in crypto. It's to the tune of $2 to $3 million per day. So there's nothing out there that competes with it. It's so far ahead of everything else, and it just launched not too long ago. It went live not too long ago. We were one of the first ones, like before the token even launched, we were covering it. It popped up. I was going on rwa.xyz like I do every morning, and before they started charging, and all of a sudden at the very top with like $400 billion of TVL was this Canton network. I'm like, what the hell is this? And then like right under it was one called Providence that we've done a deep dive on, and I was like, where the hell did these come from? Because like I said, I went on there daily, so it was just like all of a sudden popped up. And so I started, doing some research into it, and we started covering it because obviously it had a lot going for it, and and since then we've interviewed one of the co-founders, Shaw, a couple times, and we've had Zenith on that's building on Canton. We interviewed Gustav, from their head of ecosystem, and a bunch of other people, but I see way too much going on. But back to my point is you see the volatility of the rest of the market. whenever Bitcoin dumps, the rest of the market dumps, but not Canton. Canton has outperformed Bitcoin. It's outperformed most alts. When they're down, it holds or it goes up.
So let's
Not by
take a look at that. So
Yeah.
here's Canton in Bitcoin terms, and I got to say, this is what outperformance looks like. There aren't many alts that are up and to the right in Bitcoin terms, and not just that. Canton put in this channel in Bitcoin terms and broke out. And take a look at where it looks like it's about to find support. So this is a confluence. You've got the 200-day moving average. This is Canton in Bitcoin terms. Let me zoom in here so we can see this just a little bit more clearly. You've got this big channel where, from Feb to, basically, what is that? The beginning of June. So from Feb to the beginning of June, Canton was range bound in Bitcoin terms. Then it broke out. And now you've got a little bit of a retracement. And take a look. You've got a confluence here. You've got this level of what is now trend line support, plus you've got the 200-day moving average. So if Canton pulls back a little bit further, not just against its US dollar pair, but also against its Bitcoin pair, it might be a buy just a little bit lower. Now, if we grab a retracement, sometimes using a Fibonacci retracement is valuable just to see if you can't find some important levels, maybe some more confluence levels. You got the 0.5 retracement here. Canton's broken down below it. And I would take a look at the 382. So the 382, if you just throw that down, let me remove this now. So right there. So the 382, you've got a little bit of support, just a little bit lower in Bitcoin terms. And then you've got this much stronger level of support, more significant level of support down here. So maybe a couple more percentage points to the downside for Canton in Bitcoin terms, and then you find some really solid support. So it's all about that burn mint equilibrium, really. And aren't they launching, or didn't they just launch or about to launch tokenized equities on Canton? Isn't that about to launch?
Ta-da! That's like my top story for today.
There we go.
So in 7 days, the DTCC's tokenization service prepares for live trading on Canton Network. The DTCC will launch its tokenization service on the Canton Network on July 13th, enabling the first live blockchain trading of DTC custodied U.S. Treasury securities. The rollout marks a major step in bringing traditional financial assets on-chain, with a full launch planned for October of 2026. Imagine that. October. What do we keep saying about October?
The prophecy.
So 1 week from today, DTCC's tokenization service goes live with limited trades on Canton Network. So all of these trades are going to start generating fees here in a week. This is going live. This isn't an MOU. This isn't they're in discussions. This is going live in 1 week. This is the stuff we focus on here. We do not focus on hype. We do not focus on what might happen. I mean, we'll take a look at it and report it, but this is the kind of thing that we invest in here. Yep. We invest in real utility, real adoption, things that are live and generating fees and revenue for the chain or the protocol. And again, so you got fees and revenue. That's one side of our trifecta. You have adoption, which is things actually going live, not discussions of. And then third, and probably most important, if you're a token holder, because with those two things, with fees and revenue being generated and adoption, that's great for the company. That's great for the protocol. But what does that mean for you as the token holder?
Right.
Without the right tokenomics, without the right mechanics, it means nothing.
Right.
A good example, and I say this with the utmost respect, Ondo, Chainlink. I have a big bag of Chainlink because I'm looking for speculative pumps. But massive adoption, fees and revenue, they're making money. But the token itself has no connection to that.
Right. Value accrual.
there is no value accrual. So
Right.
yes, I hold some of those tokens because I don't underestimate the possibility of speculative pumps. But my long-term investments are things like Hype, like Canton, a little bit of Tron. I know David disagrees, but Aerodrome,
So
Morpho.
what's going on with those mechanics over there at the Dromos Labs? Aren't they about to upgrade that?
Sometime this month, they're being like really closed-lipped, and I do not like that.
Me
But
neither.
yeah, that's not bullish. I do not like when people. I hate to keep bringing them up, but that is one of my issues with Kita. Is there is a lot of things that are lacking in their documentation.
I think Mike, Kita should be the project that won't be named.
It's getting there, but
Yeah.
I'm going to call things out the way I see it, and if a project isn't detailing the current state of their project thoroughly, I see that as a red flag because it leaves a lot of ambiguity for the community to make assumptions. Like I don't know how many people that I've heard like when we were having our little feud with Kita, making claims about the token being required to run a node or to run a validator, and that's just not the case. The Ty, the CEO, they kept sending me an audio clip from a Spaces that he did. He stated it in his own terms. He stated that it is a governance token at its core, that it's a gas token, and they are discussing the possibility of incorporating it into anchors, and making it used more as a utility token. Which
Sure, I'll believe it when I see it.
But if that happens, we will reassess. That would add some value capture potentially, with adoption and with the other things. But the way it sits now, that is what we are grading off of. In our grades that we put in our deep dive library, is we are looking at the current state. If
and just so and just so everyone knows, I'm going to make all of those dossiers, those Intel dossiers in the library searchable. So you'll be able to jump into a single piece of content in the Intel library and search through it to find specific pieces of information. And welcome, Lucas Hawkins. Happy to have you here. And Chameleon 420, we love you, bro. Thank you so much for showing up. Love it. All good.
And Chameleon, it's you're welcome to think whatever you want. I highly encourage you to keep an open mind though, because it's I was a member of the XRP army, and I used to watch Abs and Johnny Crypto and Coach JV and all of them over there, and things have changed, and we're going to do a deep dive on them. I've asked them to come on the show, and they have not answered back. So I'm going to cover, because I've watched them for years, and I'm going to cover a bunch of the claims that they made. That when the court case was over, that it was going to pump. That when when what was it, the ISO tokens, that it was going to replace Swift, never happened. There's multiple instances where supposedly the token was going to pump, and it never did. It's why we don't make claims here. Even Canton that we're bullish on. That's why we always say it potentially, or it may pump when it becomes deflationary, because we don't know. Nobody knows.
But Mike, what you're sharing here, so the big difference between all the XRP nonsense and what we've got going on here with Canton is that the XRP stuff is always like this. It goes like this. XRP partnered with insert name of institution here to do something or other. And that thing, it's always just, a news. It's a news article. It's always some type of PR. There's never any there. There's never any substance. It's always nonsense. The difference between that and Canton is that here, what we can see about Canton is, number one, they make like $2 million a day. Okay. So extremely, extremely valuable,
Well,
amount of volume.
they actually make more than that. They generate
Right,
like
right.
$2-3 million in fees that goes at 100% of which goes to buy the token and burn the token.
And so this US Treasury market, being able to trade tokenized treasuries, DTCC listed tokenized treasuries on Canton. So we're going to see, I think anyway, this is my speculation based on what I see here. It looks like we're going to see much more volume because that tokenized treasury market is massive. It's so much bigger, or at least the treasury market is. But I think that the tokenized US Treasury market is going to become the vast majority of trading volume over the next couple of years. Seems as though Canton is going to soak up the majority of that liquidity and trading volume. Liquidity goes where it is respected, and liquidity goes where there is liquidity. Kind of a catch-22. You need liquidity to attract liquidity. And so that's exactly what's happening with Canton. And hey, you know what? If tokenized treasuries, when they go live on Canton and start to trade, if institutions see that and they're like, hey, we can cut our expenses trading these assets by 90% if we just migrate our books onto Canton. You know what's going to happen? They're going to migrate onto Canton. So winner take most.
Well, and then you got Zenith, who we interviewed here, that is going to be launching, and they are bringing EVM, DApps, from ETH mainnet to the Canton network. So that's potentially going to bring a bunch of, again, like I said, potentially, because it hasn't gone live yet, but potentially will bring a lot more fees because of transactions. But this seems to be a genuine question, so I'm going to answer, Lucas. Isn't Canton's price designed to stay at 14 cents? No. It is. There's nothing in the way that it's built out. And if you want, we've interviewed the co-founder of Canton Network and Digital Assets, Shaw, multiple times on this channel, if you want to check those out. But there is nothing programmed into this to try to maintain a 14-cent price point. The reason that it has been trending like it has is because I feel it's, and this is just my, my point of view, my opinion, but is because of its solid mechanics and tokenomics. That I feel like the price is directly correlated to the adoption and directly correlated to, and that is why I personally feel I could be totally wrong, but why I feel that, like David was just talking about, as we start getting more volume and we start getting more transactions and the daily fees start going up and we move closer to this.
The burn mint equilibrium, getting above 1.0. Yep.
So let's go to here. So this is what I feel has the most direct correlation to price.
Yep.
And this is the daily burn mint ratio. So a perfect one is what is called the equilibrium. So once it gets there, that means that there are as many tokens being burned each day than new tokens that are being minted, because there is an infinite supply, potentially, of the Canton token.
So Mike, you know what else I noticed there? If you scroll up to the very top of that, so we can see that burn mint equilibrium chart a little bit more clearly, you notice how similar that burn mint equilibrium chart looks to the price chart in US dollar terms. If you go back, right there. It looks pretty similar.
Yeah. I mean, this is, we got that pump and it's been ranging. And this is why I feel like that, as we start getting more adoption and we start getting more fees burned, and, that we're going to start seeing this. And, we'll take a look, here in a week when that DTCC project goes live and starts burning fees. Let's see if this pumps.
I'm curious. I wonder if there's a way to chart the Canton daily burn mint ratio in TradingView. I don't know if there is or not. So just yesterday, actually, I think all those XYZ markets, those are the TradFi HIP3 markets over on Hyperliquid. You can now chart them in TradingView. So we might be able to chart the Canton BME in TradingView, but I don't know. Now, if we could chart it, I'd be willing to bet that if I can chart this BME and then overlay on top of it the US dollar price of the CC token, they look like they're extremely positively correlated.
Yeah. So, Lucas, it sounds like you're genuinely curious, and we're more than happy to answer questions here. So, with all the volume CC has seen in the last year, why hasn't the price appreciated yet? The reason is because the way that it works is currently, right now, the big thing that's live is Broadridge. So, Broadridge, they tokenized their repos. So repos are short-term corporate loans, like usually like 24-hour loans, things like that. And so there's a lot of
treasury loans.
Mm-hmm. Sorry, thank you. And so those are there's a lot of fees being generated from those transactions. That is pretty much what is contributing to this current burn. And you can see right now that we are at 0.65. And it's roughly $300 to $400 billion of TVL. So if and potentially this DTCC thing ends up adding that same amount, if it's correlated, then this could push past that that equilibrium.
And Mike, you see what Lucas is saying in the chat? He's saying, yeah, that makes sense. And that's more healthy than any other altcoin narrative that he's heard. And see, that's the whole thing. It's not even necessarily about some type of speculative narrative. It's about, hey, what are the facts on the ground? What is the ground truth for these projects? And, Canton right now is still inflationary, but seems to me that you get a little bit more trading volume on that chain with tokenized treasuries. Hey, you know what? You get that BME up above 1.0, I bet you that equates to, higher US dollar value for the token itself. So it's looking pretty positive for right now.
Yeah. No, and there's no guarantees in crypto. We are still in a highly speculative market. I am not going to pretend like Canton's going to $100 or, anything like that. It is
no. We haven't modeled it.
Well, and due to the, kind of the trifecta we came up with, because if you look at a traditional, I want to pose this to you all. If you look at a traditional business, like if you watch Shark Tank, if you know about investing at all, or you look at, angel investor, a VC, and I've dealt with a lot of that in my career. The things that they ask is, what is the revenue? What is the revenue that you've generated in the past quarter or the past year? They ask your sales, what do your sales look like? They ask things like, what is your costs, your overhead, all of those sorts of things, because that is what they use to formulate how much they're willing to give you as far as an investment, or if they're going to give you an investment, and how much potentially that they're going to want, as far as like shares, or like the portion of the company that they want to basically for the risk they're taking. That's how they kind of figure out what it is that they're going to give you, and how much equity that they want. We have basically, we didn't like reinvent the wheel here. We kind of copied that and started using it on crypto, because up until now, crypto has been pure speculation. It's just been a bunch of projects that come out and saying, we're going to replace Swift, and we're going to freaking move all the value, and we're going to, cure cancer, and we're going to, replace the internet. All these different claims. Nobody had to actually show proof of concept or show that they actually could do anything. And like I was showing before, you have all of these projects. Like, and I hate to keep beating them up, but they're like the biggest one. XRP, almost $72 billion. What are they, what products and services do they have that's generating enough revenue to warrant $72 billion valuation? Because that's basically what the market cap is. And that's not even of Ripple. That's the market cap of XRP. It's not a security. There was a whole court case over it. Judge Torres ruled that XRP is not a security. And that was not bullish for XRP holders, because that means that we as XRP holders had no claim on, they have there's no contract. So basically it doesn't matter how successful Ripple is in the future. You as an XRP holder, it means nothing to you.
Right.
There's zero connection.
That's very true. And Mike, you see what Lucas is saying in the chat about the 4-year cycle. Will it hold forever? Look, no one has a crystal ball. Impossible to say whether this 4-year cycle will continue to persist. However, all markets have cycles. There is a business cycle. So it's really difficult to pinpoint why Bitcoin has a cycle. It could simply be because of the halving, but that's starting to become a little bit more dubious, in my opinion. So, I try not to focus on exactly why I think that there's a cycle. All I know is that it continues to hold true. There is some type of a 4-year cycle for BTC. And because everything else is so positively correlated with Bitcoin, it tends to move the entire digital asset space. So, yeah, I'm thinking that will there be a super cycle at some point in the future? Maybe. Who knows? Honestly, I can't say.
I can't either, but if there is one, I think what's going to happen is the same thing, going back to cycles. The same thing that happened with the dot-coms, the same thing that happened with the browser wars, the same thing that happened with the
operating system wars.
Operating system wars, thank you. All of those, you had an ocean that were competing for market share. And you saw, that Google ended up being the king of search engines. You saw that, Amazon, Microsoft, there ended up being ones that just sucked up market share because of adoption. They had a superior product, they had a superior service, and they just sucked up all the liquidity in the market. You're seeing it with AI. You're seeing it with microchips and things like that. It's history repeats itself, or people like to say it doesn't repeat, but it rhymes. But you know what I'm saying.
Yeah. But and Mike, when it comes to the semis, so there's a lot of traders that I follow who have decades and decades of experience, 4 or 5 decades of trading experience. They've been in markets for a long time. And what these guys are all saying is that, hey, the semis, when they go parabolic, and then you get IPOs at the top of a parabola for the semis, well, that usually marks a top. And with the S&P, at like a PE of 23, the forward-looking returns over the next 10 years for the S&P have been 0 when the PE gets this high. So what that tells us is that if history is any guide, we are likely to see a significant correction in stocks at some point over the next 10 years. Now, how useful is that? At some point over the next decade, we're going to get a correction. Yeah, no shit. But, it's just, there's a lot of malinvestment in the space. And that malinvestment is required to build out a new technology. It was required for the railroads. It was required for internet. It seems as though it's required for AI too. And are we going to see a big correction in these AI names? I think that it's pretty likely that we do, because OpenAI and Anthropic, those two business models, oof, man, they're in for a world of hurt, I think. You take a look at what businesses are starting to say about using OpenAI and Anthropic products, it is not good. And you take a look at what Alex Karp has to say.
Well, and I think what you're getting at is valid, because what a lot of those corporations are saying is they don't allow their employees to use it because of intellectual property. They don't want to be using these AIs that are collecting data where if they're working on proprietary proprietary services or proprietary technologies, they don't want that to get leaked by using an AI.
And so, Mike, that's what Alex Karp was saying. He's the CEO of Palantir. So what he's been saying, publicly, loudly over the last couple of weeks, is, hey, you know what? If you use OpenAI and Anthropic products, and you're a business, right, and you've got some alpha, that's your company's secrets, and you're using these AI tools from OpenAI and Anthropic, they are, essentially hoovering up all of your alpha. They're hoovering up all of your data. And so I don't know if this is true or not, but there was speculation recently that Claude Design was actually some type of a shitty copy of Figure. I think that the company's called Figure. And, that's, I've been hearing that more and more and more. And so all of these different businesses that have been using OpenAI and Anthropic products in the past, they are publicly stating that they are migrating to open source Chinese models. Just take that in for a second. They're using Chinese models instead of the American models because, number one, they're 90% cheaper, okay? And number two, they can run those models locally if they want to because they're open weight. So with an MIT license and open weights for these models, and the fact that these Chinese models are just as good as the models from the American frontier companies now, the American frontier labs, think OpenAI and Anthropic. Well, if you're a business owner and you know that using OpenAI and Anthropic models is going to lead to your alpha getting hoovered up by OpenAI and Anthropic, where they can just clone your business if they want to, that's a big, big problem. And if you also know that you're spending 10 times more for your token budget to use OpenAI and Anthropic products than you would have to spend if you used open weight Chinese models, that's a no-brainer. You have to migrate away from OpenAI and Anthropic. So yeah, that's a problem. And what does that mean for all these chip stocks that have just run to the moon?
Well, and what does that mean for Anthropic stock and a lot of that stock? So
probably nothing good.
We got about 7 minutes. Let me blaze through this real quick before we start the deep dives. But again, July 13th soft launch is a result of a partnership announced December of 2025 between the DTCC digital asset, which is the builder of the Canton network. DTCC is using its Composer X suite to enable the tokenization of treasury securities held by the Depository Trust Company. This is the DTCC. This is a government body, with the scope expected to expand in the months that follow based on participant interest. Full rollout is planned for mid-October 2026. The DTCC also serves as co-chair of the Canton Foundation alongside Euroclear. That is the European version of the DTCC. So this is governments. This is governments adopting this.
So I just want to correct one thing there. So the DTCC, the Depository Trust and Clearing Corporation, is not a government body. It's a private. Yeah, it's a private member-owned company. So it's private but member-owned. So what does that mean? Well, it's owned by its participants, which include major banks, broker dealers, mutual funds, and financial institutions that use its services. So just wanted to clarify that there.
Thank you for the correction. See, we're all about putting accurate information out here, no egos.
And how easy was that? It's like, I have no problem with being wrong. It's like, I'm just looking for truth.
Yeah. So it gives it a direct role in the governance of the network on which its tokenization service runs.
So Mike, let me pause you. Let me pause you there just real quick about Euroclear. So this is important because on July 1, and so of this month, 5 days ago, how many digital asset, companies in Europe have been now basically like disbarred, if you want to use that word, from the European market as a result of not being compliant with MiCA. The biggest of them is Binance.
Well, yeah, I was gonna say Binance. They had to remove like USDT, and then they had to basically remove themselves.
Yeah, they got removed.
Yeah,
So yeah, they got taken out to the woodshed when it comes to European markets. And but this is an opportunity for Coinbase and a bunch of other exchanges, centralized exchanges that have MiCA licenses. It's also an
yeah,
opportunity for Canton, it seems.
yeah.
So yeah, I mean, just because Binance has been the largest exchange for a long, long time does not mean that it will continue to be.
Dude, Yahoo was the 800-pound gorilla. It was the Google back in the day, and they actually had an opportunity to buy Google and passed because they thought that they were the shit.
They
And
had an
Google,
opportunity to buy it for $1 billion.
yeah, and they passed. And Google, we all know that that's the fucking search engine now.
Yeah.
So nobody's too big. There's somebody can come along, the little guy that has a better product or a better service. So this is a great question, Lucas. I'm actually glad you brought this up because let's do an apples to apples comparison. So thoughts, because Stellar, they also announced that they're working with the DTCC on a similar project. So absolutely. The problem is, and we did a deep dive on this. If you want to go to our website here, the node.pro, and go to our Intel library, you can scroll down, and actually you can just search now, and you can look for XLM. There you go. And you can actually watch our deep dive. I am bullish on Stellar working with the DTCC. The problem is the tokenomics with XLM. Again, I'm not saying that you can't get speculative pumps because people that don't understand the deep tokenomics. Yes, you can hold it, it can pump. I just highly suggest you take some profits, like I was telling people to take on XRP when it was pumping to $2 and $3. I sold mine at $2. I didn't sell the top, but my average buy-in price was in the 30-cent range. So I got out at $2, made my money, and moved on. It went up past $3 and now has pulled back to around $1. Not to say that it can't pump again. We've seen meme coins that have zero value other than community.
So I want to give everyone some information about DTCC and XLM Stellar. So, and this is a problem, okay? Because this is the same type of nonsense that we see from XRP people all the time. It's a proposed partnership. There's no there. So to put it bluntly, there is zero trading volume from the DTCC on Stellar Network right now. So
but let's say let's just, in a make-believe world, if it does happen.
Even if there was, you're right.
But
yeah.
But what does that mean for the token? And if you watch our deep dive and
Zilch.
do your own research, don't just take anything we say or anything. Yes, we have a whole website, Lucas, of where we have the Intel library. We do 13 deep dives a week, and all of them. Like today, we're doing Algorand and Plume. All the deep dives. So let's go to XLM, and I'll show you what is in there. So XLM, we'll click on it, and on every single one of them, you get about an 8-minute video that just gives you the down and dirty on the project. Then you have basically like all the information, all the data of what's going on with the project and who they're working with, and just kind of the alpha on the project. And this isn't bullish or bearish. This is just stating facts. Are we going to get it 100% right? No, we're not. That's why you still need to do your own research. But 95% of the information here is correct.
And you know what's interesting here, Mike, about Stellar and DTCC and Canton, because Canton figures into this. What's so interesting about this is Stellar is not the first phase of the DTCC launching its initial production trades for its new tokenization service. The first trials are actually taking place this month on Canton. So the DTCC is using these initial weeks this month to test the waters with over 50 major financial firms to ensure these basic mechanics of tokenizing Russell 1000 stocks and US Treasuries work without breaking Wall Street. And they're doing this on the Canton network first. The Stellar timeline, that is scheduled for the first half of 2027. And, here's the thing. It's not live on Stellar. And even if it were live, there is no value accrual mechanism to the XLM token whatsoever.
No.
So, and that's borne out.
It's a gas token.
Yeah. And that's borne out in our deep dive research. Yeah.
Well, it's almost exactly like the XRP token. Those that don't know, I always forget his name, but one gentleman left, and chat, square me away because you always do. He left Ripple and XRP and started XLM, and basically built the same thing. And the gas, it costs 0.00001 XLM per transaction. I actually did the math on it, and the max TPS, or transactions per second, is 4,000. And at max TPS, if it was running full throttle every day, every hour, it would take over 5,000 years. It was like 5,600 or something, just to burn 10% of the XLM tokens.
Hey, don't worry about it. 5,000 years, it's nothing,
That's not bullish,
Nope.
because at no point in our lifetime, enough of the tokens are going to be burned to make the price go up in any significant way.
Yeah.
It's just not.
So, look, liquidity goes where it is respected most. Liquidity goes to where there is liquidity. And right now, that liquidity for the DTCC, tokenized treasuries, and Russell 1000 stocks is on private Canton. So
thank you, Crispy. Jed McCaleb, that was his name, because forever he was dumping tokens, and this is back when I had like over 40,000 XRP. Like, he was like, part of what he was required to do legally was he had to sell all of his XRP tokens, and so there was like this monthly dump of Jed McCaleb's tokens. And that was another one of the narratives. As soon as Jed McCaleb, is done dumping tokens, XRP is going to pump, and it didn't. As soon as the lawsuit was over, it was going to pump, and it didn't. And it was just
that's another good indicator.
And it was going to pump, and it didn't.
Yeah, it won't happen either. So here's another indicator to watch. When you see insiders dumping tokens, that is never a bullish indicator right there. You want to see insiders buying more. Just think to yourself, is it a bullish sign if the people who are running the project are selling, dumping on you? That's
Ripple
not good.
has an unlock from escrow of 1 billion tokens a month. They don't always sell it. Sometimes they relock it, but they pay for the majority. I mean, it was all, but they pay for the majority of their operations. All those fancy offices that everybody brags about in San Francisco and New York and all around the world, and all these companies, this bullish news that they're buying this bank and they're buying that bank. How do you think that they're buying all that? They're dumping the token for liquidity to build Ripple. You're bootstrapping their company, and the token has no connection to the success of the company. You are funding them building a successful company, even if it does become successful. And there's no legal contract. It's not a security. It's not a stock. You have no claim to any part of what Ripple does.
In fact, it's illegal for them to make any type of claim like that. So, yep. Yeah, it's not good, So this is fun. No, it's not fun. No. Dude, these are facts.
These are facts. So
I would say that those tokenomics there are suboptimal, to put it mildly.
Yes. So if you go to the last page of these deep dives, if you go to the very bottom down here, and you go to the source document and scroll to the bottom, this is something that we do that nobody else does. We give you all of our cited sources. So if you've been to college, you understand what I'm talking about. You can't just make claims. You have to support your claims. And
Mike, you want to share it? You want to share your screen?
Oh. Oh, yes, thank you. All right. So at the very bottom, there's the source document. If you go to the last couple of pages of the source document, we hyperlink all of our sources. This is where we got all the information for the deep dive. Much of it is from the official documentation, like right here, plume.org, blog tokenomics. So the deep dive that we're about to get into, that's where we got the information about the tokenomics of Plume. And I'm excited to see this one. I have a big bag of Plume. I'm bullish on the project, but I am interested to see the tokenomics. I understand a lot of it, but I'm hoping that it's better than I think it is, because judging it off of the way that we currently are looking at the tokenomics,
the trifecta,
value, I don't think that Plume is going to have very good value capture. Am I still going to hold my bag? Probably, because
you got to just pivot.
I've done that with a bunch of them. But my thing is I do want to hold some projects that are speculative, because I don't want to understate that we've seen it before, huge speculative pumps. And I think if there is going to be one, I think if RWAs catch traction and a project like Plume, where it's purpose built for RWAs, we could see a pump. So that's kind of why I'm holding it. But
so Mike, the way that I think about that type of thing is through the lens of opportunity cost. So if you're holding an asset like Plume and hoping for a speculative pump that may not ever come, you've got capital locked up in something that might be a poor allocation. And if you were to,
if it's a small portion of your portfolio, not a huge deal.
Sure, but I'm just saying that holding something where you're hoping for a speculative pump might be suboptimal compared to realizing a loss or just exiting a position and reallocating that capital to something like Bitcoin, let's say. So
no, I mean, we did a deep dive on Bitcoin, and according to our trifecta,
I know, I agree. Yeah, I agree. So you exchange.
And let's be honest, when it comes to value capture, Bitcoin sucks. I mean, we're not saying that our ruler is,
that's true.
Is the all-knowing, seeing eye. We're just saying that is what I'm using to try to divine, which of these projects in this, millions and millions and millions of projects have the best, possibility of, being around in 10 years or 20 years or 30 years. That's what I'm looking for. I'm looking for the Microsofts. I'm looking for the Googles. I'm looking to get in on these projects and earn, with the tokens. That's another, kind of fourth side of the, the trifecta.
So I think that would be we would call that, is this a productive asset? Does it generate yield in some way?
Yeah. Or can you use it in DeFi? Because I mean, that's something I did with Plume and made a ton of money off of Plume early on that I invested in other projects.
So the way that you made that money was because of the volume. So when you're an LP, the only time it makes sense to be an LP is if there's a ton of volume and if the token you need it to kind of move sideways. Because if you're an LP, impermanent loss is real, okay? Yeah. And impermanent loss, that's your cost of volatility. The only way you beat IL is if there is a ton of volume in that pool. There's got to be a ton of volume. That way your fees, that's your theta, your fees outpace your impermanent loss, right? So here we go.
This is a good question. Thoughts on quant? We need to do a deep dive on it, but
I can't speak to it yet without having the evidence. You can't opine without deep dive evidence first. But QNT, just the fact that it's one of those ISO tokens, right? So it would need to wait before I could really speak to it intelligently. Yeah.
Well, Well, welcome, Eric, and let's get into these deep dives.
Awesome. Okay, so the plume paradox. Let's check this out.
For years, the crypto industry chased a massive objective, building the infrastructure to migrate trillions in traditional financial capital onto public blockchains. On paper, the Ethereum Layer 2 Plume network appears to be executing this exact promise, recently crossing $480 million in total value locked.
Okay, let me just pause it right there because I refuse to allow these pieces of deep dive research to give us inaccurate information.
Yes.
So what I'm going to do here is I'm going to hop on over to DeFi Llama, and I'm going to take a look at Plume mainnet. And although it was true, right up to October 10th of last year, we all know what happened on October 10th. Although it was true that the Plume network had a ton of TVL back then, roughly 300 million in TVL, that's no longer true. And in fact, we're sitting at less than 12 million in DeFi TVL today. So I just wanted to make sure that we're putting out accurate information. It was at one point true that Plume network had significant TVL. That is no longer true, according to DeFi Llama data.
Yeah.
To understand the scale of that achievement, Plume now captures nearly half of the global market share for non-stablecoin real-world asset wallets.
It at one point did. This is no longer true.
Exactly.
Yet, this runaway commercial traction reveals a fatal contradiction. The network's native utility token, Plume, has completely collapsed. This chart details the timeline of that failure. The token peaked at a speculative pre-mainnet price of roughly 25 cents in March 2025.
Okay, I got to pause it again. What is the ticker for Plume? PLUME?
Yeah.
PLUME? Okay, let's just take a look at this real quick. Now, these are Binance data, and I'm going to zoom out here to a weekly just so that we can see.
Yeah.
So this is I would say that this is suboptimal. That's my new favorite phrase.
It's terrible. I'm not going to lie. And again, I'm a token holder. I have a decent sized bag of Plume, but I'm going to call it like it is. This is a shit chart.
And look at that. So that's the week of October 10th. All right. So October 10th, I think, was a Friday or something. But this is what an illiquid token does. So the price action on the 10th of October for Plume, if we measure this from peak to trough, at one point it was down 93% on the session. That is what illiquidity looks like. So just keep in mind, liquidity goes where it is treated best. Liquidity goes where there is liquidity.
Yes.
By July 2026, it plummeted into a consolidation zone around 1 single cent. A 95% loss from all-time highs is the mathematical signature of a dead or abandoned protocol.
Yep.
It is highly anomalous for a network leading an emerging financial sector. How can a network be successful at onboarding institutional capital while its native token approaches zero? Resolving this paradox requires discarding the baseline assumption of early crypto markets. Network adoption does not automatically equal token value. To find the disconnect, we have to map out the structural cash flows. A skeptical observer...
So, did you hear the terms that the narrator is using there?
Yeah.
Network adoption does not equate to higher token value.
No.
Because cash flows need to accrue to that token somehow.
There needs to be value capture.
See, that's what we're always talking about.
Might assume that $480 million figure is inflated by circular DeFi mechanics or wash trading, but examining the active network participants proves the deployment is real. Apollo Global Management has deployed $50 million of hard capital into diversified private credit strategies directly on the network. WisdomTree has integrated 14 tokenized investment funds onto Plume's on-chain rails. And Invesco structured a $6.3 billion senior loan strategy using the network's underlying tokenization architecture. Add in major allocations from FalconX and EtherFi directly into Plume's regulated nest vaults, and the reality of their traction is undeniable. The presence of
Yeah.
That pretty much that Nest credit is what's kept Plume on life support, because that is native to the Plume mainnet. But that is really where the little bit of TVL that's left, that's really where it's at.
So Nest credit, this is it looks like the tokenization layer on top of Plume.
Well, that's not the tokenization layer. It's like a DEX that that those institutions and stuff like that, where they offer like not a fund but baskets of assets. I can bring it up.
Yeah, so I'm looking at it right now. I'm looking at the income statement for Nest Credit. And this is interesting to me because, we see, protocol revenue here at the top line. The top line protocol revenue at one point, it looks like in Q2 of this year, top line protocol revenue for Nest Credit approached $1 million. So far in Q3, I mean, look, the quarter has just started, but we're only sitting at roughly 50K. The interesting thing, though, is gross profit and earnings. So DeFi Llama data, we would have to, verify this, but according to DeFi Llama, Nest Credit has generated a big old goose egg, zero, zilch, nada, when it comes to gross profit. So that's something to be on the lookout for.
So it's about $400 million in volume, and it has Blackstone, UBS, Superstate, Hamilton Lane. But this is, it's you're not going to make a ton of yield here, but this is all institutional stuff. So it's basically vaults. So you can come here to vaults, and you have like the Black Opal, Liquid Stone 2. You have in Alpha, you have in Basis, and so like let's click on one of these. Here's Wisdom Trees. So it looks like Wisdom Tree. It looks like there's about 3 million of TVL. Again, not a whole lot of TVL for something as big as Wisdom Tree. But let's take a look at. So this is basically, it looks like the majority of it is private credit, and then you have some liquid assets and no U.S. Treasuries.
So, Mike, if I could just pause you real quick right there on the private credit part. So it's 99% private credit, and that's opaque. You don't necessarily know what those loans are. So
there is more burrowing in that you need to do to find out what does that consist of. So not all private credit is created equal, is what David's saying.
Right, and you also got to ask yourself. You got to ask yourself this question: like, if you scroll up to the top, so we can see the yield figure for that vault there. What was that yield? 9.83%. So if you don't know what you're allocated to because it's opaque and you're not doing a double-digit yield, but you've got all of this counterparty risk and you've got smart contract risk, is 9-point-something% worth it?
Well, that's where you have to do your own research. Whenever you can't be lazy and be investing in speculative markets. You're going to have to get your hands dirty. You're going to have to get in there. Again, you shouldn't just listen to us and listen to a deep dive and be like, all right, I'm aping in. You need to get into the nuances. This right here, this is one of the ones with Apollo and Black Opal, and it talks about payment financing, short-term cash advances, 60%, over collateralized institutional credit, 28%, ETFs, 7%, U.S. Treasuries, liquid assets, private credit. Again, okay, payment financing, short-term cash advances. Are we talking like payday loans? For people, people in the hood, or are you talking about, are you talking about corporate, short-term cash advances? What is that? That is what you need to do. That's your due diligence that you need to do to understand what it is that you're investing in. And sorry, let's get back to the deep dive. I don't want to take too much time on this.
Yeah, you've really got to do the deep dive research. And if you can't figure out what you're allocated to, don't allocate.
No.
These highly conservative financial titans makes the collapse of the Plume token even more inexplicable until you examine the strict legal boundaries holding those assets together. Traditional asset managers cannot legally interact with anonymous smart contracts. To deploy client funds, they require regulated intermediaries and authoritative peer-to-peer ledger records. To solve this, Plume's parent entity, Kimber Labs Incorporated, chose not to rely on offshore regulatory arbitrage. Instead, they integrated regulated corporate entities directly into their technology stack.
Who was the bad guy? One of the bad guys from Billy Kimber. Billy Kimber. That was one of the bad guys from that show that I used to
In the
like.
United States, they registered Kimber Transfer Agency LLC directly with the Securities and Exchange Commission, allowing them to legally manage ownership changes and distribute dividends natively on-chain. For global distribution, they secured a Class M license for Kimber Digital Assets Bermuda, overseen by the Bermuda Monetary Authority. This offshore license allows the Bermuda entity to structure every individual nest vault, Plume's flagship asset containers, as an independent incorporated segregated account. This legal mechanism provides statutory ring fencing. It ensures each vault maintains its own separate legal personality.
There's regulatory risk here, Mike, because as we await, the Clarity Act, I bet you that once that Clarity Act passes, assuming it does, there's going to be a lot of institutions that are going to say, hey, you know what? We would prefer a U.S. regulated entity over a Bermuda regulated entity. So there's regulatory risk here.
Well, and something to point out though is the what they were just going over, where each of the vaults are segregated. That's very similar to what Morpho does, and I actually like that architecture.
Oh, for sure.
Entirely bankruptcy remote from the parent company and from any other vault on the network. This heavy regulatory scaffolding successfully de-risks the protocol for institutional allocators, but in doing so, it introduces rigid legal boundaries around how that capital and the yield it generates can actually flow through the network. The primary engines drawing this institutional capital are those regulated nest vaults, housing low volatility, yield-bearing collateral like U.S. Treasury bills and CLOs. But the curation and hosting of these specific vaults are managed by an entirely separate entity, Nest DAO LLC. Nest DAO LLC is registered in the Republic of the Marshall Islands strictly as a nonprofit organization. Because of this nonprofit status, the DAO charges zero administrative fees, it retains zero commissions, and extracts zero yield spreads from the underlying assets. Every single cent of interest, dividends, and capital appreciation generated by these assets bypasses the protocol layer entirely, passing straight to the vault token holders. Standard decentralized finance protocols typically skim a percentage of asset yield to execute token buybacks or reward protocol stakers. Plume cannot legally do this. The developers have legally and structurally firewalled the Plume token away from the cash flows generated by its $480 million in real-world assets. If the Plume token...
Okay, so we got to just pause it there for a second. If there's a firewall between the cash flows generated by the network and the token, right? So it legally can't.
That's what I was pretty sure about.
Oh man, this is horrible. So it legally can't accrue value. That's no bueno.
Is structurally excluded from the asset yield, its economic value drops back down to a single function. It is purely an execution layer utility asset, used exclusively to pay network gas fees and secure validation stakes. This chart compares the 30-day economic profiles generated across the Plume ecosystem. The yield-bearing assets hosted on the chain generate substantial cash flows. Pools managed by Nest Credit and Centrifuge alone capture well over $360,000 in combined monthly yields. But zooming in...
I'd be willing to bet, Mike, that this was true when there was TVL on the chain, but it seems as though there is no longer TVL on the chain. And so I'd be willing to bet that these gas fees are probably pretty close to zero now.
And on the network's actual transaction layer reveals the truth. The Plume Layer 2 generated only $1,895 in total gas fees over a 30-day period. That nominal gas fee collection is the single exclusive direct source of value capture for the entire Plume token ecosystem.
Yuck.
To make matters worse, the network's circulating token supply is expanding aggressively. Due to structured ecosystem incentives, approximately 3.56 million Plume tokens unlock and enter circulation every single day.
Wow. So this is doo-doo. Thank you, Jeff. Jeff
Yeah.
enters the chat with fire. It sounds like Plume is some poo-poo. Yeah, so if you've got a token that is aggressively inflating away, plus it is legally incapable of any real value accrual mechanism, and you know that the TVL collapsed from 300 million plus to less than 12 million today, according to DeFi Llama data, those things together tell me that this chain is dying. This protocol is dying.
You must weigh this continuous dilution against the network's fully diluted valuation, which sits comfortably above $100 million.
Okay, so let's verify that data point. And the way that I want to do that is by hopping on over here to Coin Market Cap. And I want to just find that Plume token real quick. And the fully diluted valuation, it looks like, is sitting at 108 million. Okay, great. So we were able to verify that piece of information.
Less than $2,000 in monthly network revenue mathematically cannot offset millions of daily token emissions until the network is incapable of supporting the token's market capitalization. Beyond the stark economic reality, there is an infrastructure cost. To maintain institutional compliance while keeping those gas fees low, Plume heavily compromises on Layer 2 decentralization. To optimize data storage costs, the network uses Celestia for data availability, managed through an external data availability committee.
Okay, Celestia itself has problems too. So just we gotta.
I've been critical of Celestia since it launched.
It sounds like this is dog doo-doo built on top of like maybe some cow doo-doo.
Code required to validate and release transaction data is 1 out of 1. This represents an extreme single point of failure. If this single committee member goes offline or is compromised, the entire state transition history becomes unverifiable, potentially freezing all on-chain withdrawals back to Ethereum. Furthermore, transactions on Plume are ordered by a single centralized sequencer, operated exclusively by the Plume team, creating a permanent vulnerability to sequence manipulation and front-running. Even their fraud-proof system is restricted. A standard network user cannot independently challenge an invalid state route published by the sequencer. Only a small pool of whitelisted validators has that authority.
So, Mike, what happened with Layer 0 again? Wasn't it 1 of 1 or something like that? Oof, man, this looks really, really dangerous, the way that this chain is built.
Finally, to satisfy regulators in the US and Bermuda, rigid control mechanisms are built directly into the assets themselves. The Bermuda entity embeds hard-coded freeze and seize functions directly into the ERC20 vault tokens. This grants compliance officers absolute administrative power to block transactions or seize assets directly from secondary user wallets. These centralization vectors are not technical failures. They are the deliberate, mandatory design choices required to build a regulatory compliant environment. Plume functions exactly as designed, as a highly controlled, tokenized private ledger operating on public rails. Plume Network has successfully built the legal and technical bridge required to move institutional capital on-chain, effectively resolving the regulatory friction that historically blocked traditional finance. But the cost...
Right, but how many other projects are doing that exact same thing, except doing it successfully?
Well, and doing it and their token actually has value accrual.
Right.
Is steep. Heavy architectural centralization, and the structural exclusion of the native token from real-world cash flows. For capital allocators evaluating the ecosystem, there are 2 distinct paths. If you are deploying yield-seeking capital, you should bypass.
This is so interesting. Look at the image. It's literally a fork in the road.
The Plume utility token entirely. Instead, deploy capital directly into the regulated Bermuda nest vaults, such as the Falcon X structured credit facility, where you gain exposure to bankruptcy-remote, institutional-grade yield. However, token speculators require serious caution. The Plume asset is strictly an inflationary gas token running on a centrally sequenced network.
Wow. So, Mike, how many times have we seen this exact same type of architecture from these projects? an inflationary gas token with no value accrual mechanism.
Yeah,
Like,
it's 95% of the tokens out there. I know a lot of people out there think that we're just FUD projects, but I mean, ignore this at your own peril.
I
Long
agree.
term. I mean, it's you have to understand if what you hold and what you bought has any value. I mean, I can't stress it enough.
Yeah, I mean, I don't like holding bags of doo-doo. Not good.
Until the protocol implements a direct mechanism to capture RWA yields, the asset remains exposed to ongoing dilution, drifting further away from the network's commercial growth. A massive growth in managed assets validates the strength of the infrastructure, but it does not solve the token's structural isolation from that value.
Wow. Okay, so what type of grade do we give this thing? What do you think?
I would say probably a D.
I mean, okay, let's you think maybe a D is...
I hate to say it because I was very bullish on Plume and I have a decent sized bag of it, but we got to be honest here. If we're going to have integrity, we got to call it what it is.
So I guess you want to give it a D? I was thinking an F.
I still think that it has the potential of speculative pumps, just based off of good news, because Plume, the company, I mean, they've been sitting at the table in Washington D.C. and helping draft legislation and doing a lot of stuff like that. So I mean, there could be bullish news that makes the token pump, but it's not going to be through value accrual. It's not going to be from anything real. So, I mean, I think it has potential, just no real, long-term potential. So that's why I give it a D.
You know what? What I'll build into the back end.
It just has to have nothing going for it. Like there's nothing bullish being said about it. It has no value accrual. It's just pure dog shit.
So what I'll do here is I'll build into the back end the ability for us to give like D plus, D minus, stuff like that. A plus, A minus, B plus, B minus. Right now it's just A, B, C, D, F. So we'll give it a D. And I'm just going to go ahead and update this and then bring it on back to the Intel library. And Plume gets a grade of D. It gets a node network grade of D.
For D's nuts.
Yeah, that's right. It looks like Plume likes dragons. So let's check this out. Algorand. Yeah. Algorand, man. All righty. So what is this thing again? What is Algorand?
I can tell you already what that it doesn't have any value accrual.
So Algo, let's just find the Algo token real quick. Algo. So it looks like once this loads for us, this is going to be, this is a weekly. These are Coinbase data. And this is not what good tokenomics look like. This is bad. Basically trading at the lows. I mean, it's trading at its all-time lows. Had a speculative pump, in the 2 bull cycles ago in 2020, 2021, but got no pump in this previous bull market. In fact, when it did pump in October of 2024, it got rejected at its 200-week moving average several times, and even got rejected again at its 200-week moving average in July of 2025, and is now trading below its bear market lows from 2 bear markets ago. So this is no bueno. Just taking a look at that. Let me bring it on back. Let's play this piece of video content on Algorand. Here we go.
Since its genesis block, Algorand has achieved a feat virtually unheard of in distributed networks: 7 straight years of continuous mainnet operation without a single network outage or blockchain fork. This stability is anchored by its pure proof-of-stake architecture, which generates and finalizes blocks deterministically in under 3 seconds. To make this engine accessible to the wider ecosystem, developers deployed the X-Chain Accounts infrastructure. Users can interact with Algorand applications natively using established EVM wallets, completely abstracting away the need for new seed phrases or specialized software. Yet, looking at the right side of this table reveals a stark reality. Despite sub 3-second finality and EVM integration, Algorand's total value locked across decentralized finance plateaued at roughly $97 million in early 2026. Even within that constrained liquidity, the capital is highly centralized. Circle's USD coin accounts for 98% of the entire stablecoin market share on the network. The protocol has engineered flawless cryptographic resilience, but that technical mastery has not translated into deep capital liquidity.
I just want to pause the piece of video content here for a moment. And Spider Greg, I appreciate you hopping in and potentially correcting me on what your information is there. One thing I will say is that when the market tells you the value of a token, I think it's important to listen. And when we take a look here at the current DeFi TVL for Algorand, it looks like at one point it was, above 190 million. However, right now, sitting at 31 million. So, this is suboptimal, let's say. And so let me bring it on back over here to the piece of video content.
The regulatory environment sets strict boundaries on how the network can incentivize growth. In March 2026, the SEC and CFTC issued joint guidance, officially classifying algo as a digital commodity. Under this legal framework, the network cannot act like a security. Algo cannot convey passive yield or rights to future income. Any financial reward must be explicitly tied to programmatic, active network operations. This operational mandate operates under an absolute economic ceiling. The network has a hard-capped maximum supply of 10 billion tokens, minted entirely at Genesis. By mid-2026, 89.2% of that total supply was already circulating. Algorand also enforces a highly optimized flat transaction fee, averaging 15 thousandths of a cent. It appeals heavily to users.
Wait, so 15 thousandths of a cent. Huh, okay.
Processing high-frequency transfers, but it poses a severe threat to the protocol's bottom line. With virtually free transactions and no remaining tokens to mint for inflation, the protocol faces a mathematical dead end. Its optimized structure starves its own long-term security budget. Anticipating global regulatory standards, specifically the 2027 French ANSI mandate for quantum-resistant security, Algorand systematically rebuilt its cryptographic foundation. During the version 4.3.0 upgrade in September 2024, engineers embedded the Falcon Verify opcode directly into the Algorand virtual machine. This enabled native on-chain execution for quantum-resistant signatures. The protocol selected Falcon 1024 over alternatives like MLDSA for pure efficiency. Falcon signatures are 3.6 times smaller and execute significantly faster on standard ARM-based hardware. But the upgrade introduced a data threat. Traditional keys require 32 bytes. SALT requires 1,800 bytes, instantly bloating the ledger. To solve this, the massive key is routed through a hash construction funnel.
So I just want to pause here for a second because what Spider Greg is saying in the chat is extremely valuable. And I actually disagree. So what he's saying here is by taking a look at the chart of an asset, that you can't take away what the tokenomics are from that asset just by looking at the chart. And although that may be true, what I can take away from that is that, that the market doesn't like the token. So there's obviously something broken in the tokenomics when you see a chart that is just down and to the right. Now, another thing here is, Spider Greg, you're saying that it's basically jumping the gun, right? That the space has proven that people don't invest in good projects, they invest in narratives. And I would actually disagree with that statement because I think that moving forward, what we're going to see is investors allocating not to narratives, because that's vapor. Investors are going to start allocating to coins where the trifecta is valid, where there's real user adoption.
I think his point is historically he's correct. Historically in retail, a retail-driven market, the speculative retail-driven market, yes, we have seen, huge price pumps in a lot of these projects. that aren't the best, the best technology. They're not the best, whatever. But I agree with David that, moving forward, we're going to start to see these institutions, these banks, and smart investors starting to value these tokens using what we're talking about, the trifecta. They're going to start looking at actual adoption. They're going to start looking at actual fees and revenue that the project generates. And the token is going to be valued based off of its connection to that. Because otherwise, like I always say, you're buying the jersey or the baseball card of your favorite project. If you're buying a token that has no value capture,
Right.
it's any pumps you get are going to be 100% be purely speculative. It's you're hoping that a bunch of people hear bullish news about it and buy into it, and you bought in low. So when they buy in, it pumps the price so you can sell and use them as exit liquidity. That's basically what crypto has been up to now.
And I think that moving forward, it will no longer be that. I think that what people are going to be looking for moving forward is user adoption, value accrual, and we got to hit that trifecta.
Deriving an address that fits perfectly back into the 32-byte footprint. Live deployment still required overcoming hardware vulnerabilities. Developers had to implement constant-time fixed-point conversions to stop validation hardware from leaking secret keys through side-channel power analysis.
That's not good. Leaking secret keys. You don't hear that very often, but that's horrible.
The result is a network running Level V post-quantum cryptography, achieving the security equivalent of AES 256 without sacrificing its sub-3-second throughput. As the cryptography evolved, the economics followed. The network entirely stripped away its early passive participation rewards, replacing them with a strict direct consensus incentivization model. This shift was an architectural necessity to protect the token's digital commodity status. Generating yield now strictly requires active cryptographic work to secure the ledger. Independent validators face a firm barrier to entry. To qualify for block proposal rewards, an operator must commit a minimum of 30,000 algo to consensus. To prevent network monopoly, a hard ceiling caps staking rewards at 70 million algo per account. Massive capital pools are mathematically forced to distribute their assets across multiple independent nodes. Crucially, the protocol operates without punitive slashing. If a node fails to propose a block, its stake is not burned. Instead, it is algorithmically marked offline. The sortition committee immediately bypasses the offline hardware and selects the next active node, preserving network liveness. This design aligns economic incentives directly with ledger stability. Operators risk the opportunity cost of lost yield, but their principal capital remains completely secure. To pay these active operators, the protocol captures every transaction fee executed on the mainnet. Fees flow from user wallets into a central reservoir known as the global fee sink. To account for latency, the protocol delays payout. The sink holds the assets initially. During the subsequent block, exactly 50% flows directly to the successful proposer. Herein lies the mathematical problem. At 15 thousandths of a cent per transaction, organic network fees do not generate nearly enough yield to pay for the hardware securing the chain.
Ouch. That is bad. That is very bad. Because why in the world would you be incentivized to swap into algo and use it to secure the network if you're not going to be compensated for doing that? There is no incentive to do that. So it sounds as though at a certain point, validators will simply exit. So let's continue playing this here.
To keep validators online, the Algorand Foundation relies on a stopgap measure, paying out a Treasury-funded supplemental bonus of 10 algo per block. This line graph maps out the reality of that subsidy. It is governed by a configurable exponential decay function, scaling dynamically based on block round times, and arcing steadily toward zero over a 24-month timeline. This formula operates as an unforgiving countdown. When that subsidy exhausts, the network transitions into a non-inflationary economy that survives entirely on user fees. we are left with a flat fraction of a cent fee colliding with rapidly depleting treasury reserves. To maintain current validator yield levels once the subsidy dies, the network must organically process tens of thousands of transactions per second. A decentralized finance ecosystem holding less than $100 million simply cannot generate that kind of organic velocity.
And now it's not just less than 100 million. Now it's less than 35 million, according to DeFi Llama data.
Compounding the issue is persistent overhead pressure. Years of trading below initial launch levels mean that price recoveries are frequently met with early investors securing exit liquidity,
Right.
stalling compound ecosystem growth. Algorand's rigid commitment to incredibly cheap, predictable block space actively starves its own security budget in a low-volume environment.
That's so horrible. that is like a flywheel in reverse. Like, this is a death spiral right here.
From a purely engineering standpoint, the Algorand protocol executes post-quantum pure proof-of-stake consensus with absolute unbroken precision.
Okay, so that's why people buy this thing, because of the narrative. Post-quantum, that's one of those hype terms that you always hear. But what we just learned about the tokenomics is that this thing is in a death spiral. So I've got to be careful of those buzzwords.
With its token supply capping out in 2030, it holds distinct appeal for institutional wealth managers seeking an actively secure, strictly non-inflationary digital commodity. Yet it operates against the immediate threat of dominant network effects. The vast majority of developer mindshare and capital depth is already entrenched within the EVM and Solana ecosystems. Infrastructures like X-Chain accounts and AlgoKit are racing to bridge that technical divide, allowing external developers to tap in using familiar tools. Algorand's survival is no longer an engineering problem. It is a race to capture enough global liquidity and real-world utility before the mathematical decay of its treasury hits absolute zero.
Oh man, that is so horrible. So remember, liquidity goes where there is liquidity. And institutions are just not going to allocate to something like this when you know that you're not going to be compensated for being a validator. There's no incentive to be a validator. In fact, the incentive is to not be a validator. So it seems to me as though this chain is dying, and in the absence of some catalyst to revive the thing, I don't know, man. It's very, very difficult to justify holding any of this. In fact, with algo trading at, 18 cents right now? Is that, or no, it's trading for 8 cents, 8.8 cents. With algo trading for 8.8 cents right now, this thing seems like a good short candidate, in my opinion. So, yeah, this is not good. This is not good at all. And, Mike, how many of these projects have we seen now where, they use a handful of buzzwords and, something like post-quantum or bridging, institutional capital and layer one chain, yada, yada, yada. How many of these buzzwords have we heard? And yet when you dig in to the tokenomics, it's always horrible. And, one easy way that I've found just to, at a glance, figure out if the tokenomics are any good or not is to take a look at the chart. Whenever you see something just down 95+% from an all-time high with no move to the upside to speak of, that usually signals that there's a problem. And hey, you know what? Now we know what that problem is. In the case of Algorand, there's no incentive to be a validator. In fact, you're disincentivized from being a validator. So that security budget, when that goes to zero, that treasury incentive, when that goes to zero, if there is not sufficient transaction volume on this chain, then validators are going to step away, and then the chain dies. So yeah, be careful. I would be very, very careful. So what type of grade, Mike, do we want to give to Algorand here? What are you thinking?
I went first last time. You tell me.
This to me, Mike, seems as though it is a dying chain. So, man, I would give it a D. I would like to give it a D minus, but yeah, I would give it a D. What do you think?
I'm kind of in the same boat, and a lot of it is really has to do with the the tokenomics, the value capture aspect, and again, I mean this isn't just a dig on Algorand. I really think that using this unit of measure, and again, not saying it's a perfect measure, but using this unit of measure, where what actual value does the token have other than speculation. I think 95% or more of the projects that we cover are going to end up having a low grade. So I would tend to call this one a D as well.
Yeah. So Spider Greg, I appreciate you mentioning that they need to, really up their marketing game. But here's the problem. We just learned that there is a structural weakness in the way that validators are incentivized to swap into algo tokens and validate the network. That security budget, that is fundamentally broken. So yeah, man, I mean, if you're an institutional capital allocator and you've got a choice between allocating to something like Canton or, there are probably a handful of others, and something like Algorand, I just don't see that ever happening. Marketing, see, what we're trying to get away from is the whole idea of marketing having value. Like there's a big difference between marketing and hype and buzz and actual value created by the chain or the protocol or the coin or the token. In the case of Algorand, it seems as though it's the exact opposite. It looks like you've got a flywheel working in reverse that could eventually lead to that security budget being exhausted, and then validators are going to be incentivized to step away. So I don't know if you guys have ever seen a chain die. I've seen a lot of them die. And a good example is Phantom. When Phantom really died, people had assets on that chain, but there was no liquidity remaining. And eventually you couldn't even swap out. So you might be stuck with a bunch of assets on a dying chain, unable to exit. So I think that that's probably what's going to happen to a lot of these projects over the next couple of months. I mean, how many projects, Mike, have we seen, shutter, close their doors, close up shop for good, just year to date? A lot. So yeah, man, we got 2 Ds here today, Plume and Algorand. The node network gives both Plume and Algorand, according to data that we have available to us now today, we give them a D, both of them. So yeah, well, it is what it is. So you want to run through some socials, Mike, in the last couple of minutes that we got?
I think we covered the socials. I mean, it's as far as the node, and I know that we're going to be making a bunch of adjustments to the website, but for the most part, the things that I really want to focus on when it comes to the website is, if you want to go to the node.pro, is the Intel library. This is our free, no cost. Anybody can access this, and there's a ton of value here. Going through and discovering, these different aspects of, of the tokenomics and these projects and what they're building, what they're about, and again, we give this stuff away. And hold on. Gotta log in.
That's another thing I gotta fix. So let me just take a note on that real quick to make sure that I've fixed the way that it logs in and logs out.
But again, we post all this material. We are transparent. So you can review this. You can take notes if you're bullish on these projects and you think we got something wrong, and you want to go through here and you want to take notes on what we got wrong, and you're able to cite your source, send it over to us. Get a hold of me in the Discord, get a hold of me on X, wherever you want. I'm more than happy to take a look, and if we're wrong, we'll make adjustments. But, do us the courtesy that that we do, that we do, which is cite your sources. We cite all of our sources of where we got the information. So, that's all we ask is, remove your emotions. If you're bullish on it, that's fine. Invest however you want. We're not here to influence you to invest or not invest in anything. We are here to give you information. What you do with that is 100% up to you. So please don't take anything we say here as gospel. Just because we say that something gets a low score, it doesn't mean that you're not going to make money off of it. It just means that using the unit of measure that that we use, with the trifecta, that long term, as it sits, tokenomics can change. We've seen it in the past, but as it sits, we don't see it as being bullish, as far as holding the token long term. Again, can you make money? Absolutely.
And so I want to point out also, you see the sources there in that source document. Those are all very recent. It's not like we're citing stuff from a year or 2 or 5 years ago. We're citing stuff from this month.
July 6th, it went and look today, 2026, and it gives you a link to it. So, I mean, so Spider, is that what's
yes, Spider Greg?
It's that I live in reality. Somebody's saying, what's your source?
I mean, look, I want to see exhibit A, B, and C. If someone is bullish on a coin or a project or a token, whatever, I just want to see something that backs that up, because marketing, buzz, and hype, that's not exactly a good reason to be bullish, I think.
Oh, yeah. No, I got it.
Got it. Yeah, I see.
It took me a second, but I think you were talking to somebody else. But anybody that wants to try to poke holes in our deep dives, we've had communities come in here and get all worked up, that shall not be named, over our deep dives. And again, we cite our sources. If you think that we got something wrong, do the same. We put ourselves out there. This is the source document that we use to build the deep dive on Plume. This is off the MICA white paper. And we give the link to it. You can click on it. Let's see if it's gonna think about it. There we go. And it brings up where we got that information. So you can look directly at the MICA white paper. So that's basically all I'm saying, is just that we do our deep dives and we cite our sources. This isn't our personal opinions. This isn't just us hyping something based off an X post or budding something based off an X post. These are actual legitimate sources. So that's all we're asking. But again, we, for free, this is all stuff that most channels out there would charge you hundreds or thousands of dollars, some people tens of thousands, for this type of education and alpha. We have a whole DeFi university. If you are new or intermediate or advanced in crypto and DeFi, we have a whole course that you can go through and up your game. And we give it away. We don't charge.
It's free. It's free.
Yeah. So you can say what you want. We have a lot of people come in here and try to FUD us. We give away more value than most people have on other channels. So again, if we were malicious, wouldn't we hide all this behind a paywall and say, trust us, bro, buy it? No, we give it away. So and when you see the value that we give away, the things that we do charge for, like our coaching program, our one-on-one coaching with David, even that, you can schedule a time where you can sit down one-on-one with David. You schedule it, and he'll sit down with you, and he'll go over your portfolio. He'll go over your risk profile, what it is that you're trying to accomplish, where you're at as far as knowledge, and with that, he'll let you know if, you're going to get value out of paying for coaching with me, or I want you to go through DeFi University and focus on this, that, and the other thing. And once you're done with that, come back and talk to me. And we want to make sure that you get value. are our one-on-one calls. So if you look at our programming on Monday, Wednesday, and Friday for $99 a month, you can join these live calls with David in the community. But again, we don't hide it behind a paywall. You can do a free trial. And for a week, you can sit in on 3 separate calls and see if you find value. If you find value, sign up for it. If you don't find value, don't. We're fully transparent about it. We're not here to be scammy. We're not here to shill. We're not here to FUD. We're not here to hype. We are here to educate. That's why I don't consider us influencers. We're not trying to influence you to do anything. We are educators. We are here to educate you. And part of that is don't just take our word for anything. We're just human too. I've been bullish, and our community has been bullish on things like Plume. We've been bullish on Mamo. We've been bullish on what's some other ones I was bullish on that ended up not working out. There's projects we've been bullish on here that didn't work out. Casper was one I was bullish on forever, and I've sold my bags of them because as I learn and evolve, I have to be real. I have to be real with myself, and I have to be real with all of you. We're not perfect. We're learning this whole ecosystem, crypto adoption. There's new projects coming out. Tokenomics change. It's evolving. We are in a speculative market, and if you're not always learning and evolving, you are going to be exit liquid. That's all we're trying to say here. But anyway, yeah, an influencer. Yes, absolutely. All right. Last question before we go. Side question that I think you'd probably be into. Have you seen the Humarex Nitro Javelin? I feel like you'd have one. I'd have to take a look at it. Yeah. So yeah, Casper went to total shit, and it's not doing anything. They're not fucking launching anything. Nobody's adopting it, and I had to cut my losses. I sold my Casper bag. I have a very, very small bag in case it gets some massive speculative pump, but 95% of my bag I sold. So anyway, well, we appreciate you all. If you could on the way out, like, subscribe, share, try to get this information out to as many people as possible. Now is the time. Deep in this bear market, now is the time to figure out which projects you feel like have legs, and which projects have good solid tokenomics that benefit you, the token holder. Do not be the bootstrap liquidity for some crypto project to try to build something out when, if they even are successful, you're not going to share in that success.
Right.
You're not going to walk up to a business that's selling something, give them your money, and not get something for it. Same thing you should feel the same way about your investments. So, any closing thoughts, David?
Yeah, you know what? I think, Mike, that there's a big difference between a solid set of tokenomics and marketing buzz. So buy something that has solid value accrual. Take a look at our trifecta, and whenever you see significant marketing buzz, it should be a red flag. Actually, it shouldn't be something where you think, oh, this is a great buy. If you see real marketing buzz and it elicits an emotional response within you, you gotta leave the emotions at the door and instead take a look at the real value accrual mechanism there. So, yeah, I think we can end there.
Awesome. Well, I appreciate y'all. And if you could, looks like we got the blockchain report that's going on right now. If you want to join Jeff for that, we got the daily market wrap with David at 4 p.m. Eastern, 1 p.m. Pacific. And if you want to get in on that free trial of the live masterclass call, that is at 5 p.m. Eastern. So with that, we'll talk to you all later. Thank you all for joining. Until next time, Veteran Crypto out.
Peace.